Folks, today is Friday, January 16th, 2026. I'm making a video about Constellation Software stock. The stock has been going through a valuation reset. I've been buying more shares. I bought some yesterday. I bought more today, and I'll continue buying as it goes down. I can't time the bottom, unfortunately. I wish I could. But I continue to find Constellation attractive. Why? Because at the end of the day, all I'm interested in doing is buying predictable streams of future cash flows at an attractive price. That's all I'm trying to do. Constellation has a proven playbook, of over a decade of buying these small software companies, getting them to generate more cash, and using that cash to buy more software companies, and so on and so forth. And their decentralized model has allowed them to scale, has allowed them to continue making a very high number of small deals, defying the laws of large numbers. So none of that has changed in my view. I think there is uncertainty in terms of what role are the systems of record that Constellation has. What role are those softwares going to play in an AI enabled world? I think it's going to be seen. But if people think that companies are going to start ripping out their digital filing cabinets because we have AI all of a sudden, I'm not seeing it. And that's basically what the sell-off is telling you is going to happen. It's telling you that AI is just going to render all of these things obsolete. And I just have a hard time buying that, because when you think of it, you need that foundational trust layer to have an AI agent do anything, really. All that's going to change is that, say you have a freight forwarder and their digital filing cabinet is called a TMS, a transportation management system. Instead of having a human going in to find, let's say, all of the shipments that are sitting at this specific dock in this particular city, you're probably just going to be able to give a prompt to an agent to go interact with the system of record, to get you that information. Right? So within that scenario that I just illustrated, you still need that system of record. If you don't have it, the AI agent can't really do anything. So I think Constellation Software continues, their various software solutions continue to be extremely relevant in an AI world. So I'm not seeing the uncertainty that other people are seeing. That being said, what are the things to look out for as you continue to hold this investment? When the quarterly reports come out, you want to see how much they're spending on acquisitions. You want to see in which direction their free cash flow is trending. So you want to look at operating cash flow, and you want to look at free cash flow available to shareholders. That's been trending at a very attractive rate, even the last quarter, the quarter before that. So we're not seeing any negative signs there. What else? Obviously now Mark Leonard resigned as CEO, and he's still a director. So we're just going to want to see that Mark Miller preserves that same moral authority that Mark Leonard fostered at Constellation. Namely, we want to make sure that there's no bureaucratic creep that sets in at Constellation. Mature organizations, sometimes what happens is that the focus shifts from shareholder returns to basically having layers and layers of middle management just doing things to protect their job security as opposed to driving value for shareholders. So we want to make sure that nothing like that sets in at Constellation. We want to make sure that the decentralized model basically stays decentralized. What else? I would say those are the key things to monitor. So I'm, another thing. Constellation really what they're very good at is capital allocation, right? A lot of people think of them as an M&A company, but really they just do a lot of M&A because for them, that's where the best returns are. But there are certain business environments where, M&A might not be as attractive. So instead, they'll start returning cash to shareholders. For instance, we saw during COVID, they paid a special dividend because more cash was coming in than, their feeling of the opportunities that existed in the market at the time. So they decided to return cash instead. I would say if you start seeing announcements of special dividends in the current environment, I would view that as very bearish because it would signal to you that they're not seeing attractive acquisition opportunities. Which is basically the biggest risk. But if that were to happen, they would start returning cash to shareholders, and we're not seeing that taking place. So those are the things to look out for. And yeah, that's all I had to say. Take care. Good luck. Bye bye.